Data-driven insights for serious traders. As the closing bell approaches, momentum is analyzed, tomorrow's key price levels highlighted, and the setups that matter most broken down. This is Trading the Close with Verified Investing.
Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, guys, we had a lot of volatility in the markets. Even though it was somewhat of a quieter day, the spiders were moving up and down, and we're going to find out where everything panned out. Tomorrow, we're supposed to have some PPI data as well as retail sales data being released. And so far from what I see, that's not going to be the case tomorrow with this government shutdown. So let's jump into the market summary board and see where everything's panning out today. All right, guys, as you see here, we've got the Dow Jones is down 0.15%. Nasdaq put in a green day, up 0.54%. S&P 500 followed suit, up 0.21%. U.S. oil is still under pressure, down 0.2%. Gold reaching new highs again today, guys. Just keep saying that every single show. Impressive move. But we'll get into that chart later, too, to show you where price could pull down to. Bitcoin under pressure was down near 110,000 nearly all day today. We'll get into that chart as well. So let's jump into the S&P 500 heat map and see where some of the bigger stocks ended up on the day. We've got NVIDIA down 0.74%. Apple basically flat, up 0.21%. AVGO, nice day here, up 1.76%. AMD up 8.97%. Hang around till the end of the show. I'm going to show you where we could be putting on the brakes with this huge rally with AMD. Also, we've got a question from one of our viewers about Tesla. I'll go over that chart too. Make sure to send any questions you got to me. I'm happy to go over some of the charts. Granted, we do get a lot of questions, so I will be able to pick at least a couple a show, maybe one or two, but feel free to send those in. I'm happy to go through that analysis with you on the charts, give you some great technical insight. All right, so for the rest of the S&P 500, you can see here we've got a mixed bag. Some greens, some reds, Google up 2%, Procter & Gamble, Coca-Cola, and Philip Morris all down roughly about 1%. We've got a little bit of a mixed bag here with this S&P 500 recovery. So let's jump into the S&P 500. Displayed with the SPY ETF. All right, so we see price has trying to recover here, right, folks? We were talking about this big red candle as of last Friday. That's continuing to dominate price action. If we flip on these moving averages too, you can see here again, guys, look, we're now closing 4 days in a row beneath this 20 moving average. It's the first time this has happened since this April low that occurred. When we marched up the charts, we've not closed consecutively 3 or 4 days beneath, let alone we haven't even closed consecutively 2 days beneath the 20 moving average. The 20 moving average is displayed by this yellow line you see here on the charts. And you can see right here near the close, that 20 moving average is at 665.07. And then we're currently trading at 664.53. So we're going to now notch 4 consecutive days price action closing underneath that moving average. Does that mean the rally is over? We'll see, guys. But at least for the near term, probabilities are starting to shape up for more downside pressure here on the SPY. Major support will be right here in the 640 range. You can see from a previous pivot high. But then the resistance to the top side is going to be this red candle. That is clearly in play. If we're going to have any sort of rally to continue past the point that we're at, we're going to need to beat this red candle. That high is at $673.95. But you notice we'll be running right into this inclining trend line and the top end of this parallel channel should we beat this area. So still a lot of resistance up in this range, even if the rally does continue. You can see here 30 seconds left to go. We're trying to make a push to close back above this 20 moving average. Now 8 cents away, 10 cents away. What will it be? We'll flip back here in a few moments and see where price action did close. All right, next up, we've got the Qs. The Qs here also put in a decent recovery. Check out this 10-minute chart on the Qs. We gapped up today, made a move to push above the inclining trend line on the daily chart, and then we just sold off hard, making it look like we were about to blow through this gap fill. But so far, this gap fill held support and propelled the markets up to where we're at right now. Let's flip back over to the spiders to see where we did close. We closed at 665.17, just above that 20 moving average. So is this going to break us free? We'll see tomorrow. Now, keep in mind, we've got options expiration that expires on Friday. So we had a lot of jockeying, a lot of movement today, even on this 10-minute chart too, as you can see clearly displayed, very similar to the Qs. We gapped up and had a decent sell-off for most of the day that all concluded at 1:10 in the afternoon. So when the big boys and the big sellers were out of the way, markets just lifted right back up, started putting in near-term bullish consolidation in order to close above that 20 moving average. So an accomplishment on the SPY. How far will that continue? We'll see. Again, options expirations on Friday. We still could have some movement Thursday, depending upon where institutions want these contracts to expire. Next up, we've got the SMH. Great move on the SMH today. You can see we closed down here on the lower half of this big red candle on Friday. This recovery today is starting to gain some steam and pushing price on the SMH back up. The SMH is a leading indicator, folks. Got to pay attention to this chart if you're wanting to know if the market rally will continue or putter out. So we still have this daily topping tail intact, 348.53, plus we've got this big red candle at a high of $346.49. Those are the areas I'm watching to see if price can beat. Much like the Qs, we've got an inclining trend line that's also going to be resistance for SMH to get above, and also the topping tails and the red candle. If we can get above all of those, man, that shows there's still some gas left in the tank for the markets to go a little bit higher. And if that does occur, up here around 360 is going to be the range of the top end of this parallel, where we're going to have some very stiff resistance. So a lot of resistance right here in the charts. And it's clearly because we've really moved up a lot on the chart. So that basically makes sense there too. Next up, the IWM. Look at this daily candle today on the IWM. Talk about a doji candle here. What do dojis represent? And here's for a little education for everybody. Dojis typically represent indecision. You may say, well, why is that? Well, it's because you have equal amounts of buyers and sellers on that day of price action. So in this candle that we see, clearly that's a doji, but we did gap up, creating this doji at a higher place on the charts. That does still lean a little bit more positive, at least for the IWM, but nonetheless, this is a sign of indecision where a lot of sellers are anxious to hit the sell button. One reason why, let's zoom into the chart. You can see right here, this parallel, guys. The parallel was the 50% area was the high of the day on the IWM. So that is very interesting to see where price is still getting rejected in the lower half of this parallel channel. Last time we were in the top half was all the way back in July. So we spent an awful lot of time hanging out down here in this lower end of the parallel. Clearly, that's not going to end today. We'll see about tomorrow, but much like the SMH and the Qs, we've also got another back-ended resistance level with this inclining trend line that you see here, right at that 50% area. So be watching tomorrow, right around 250, 291 to see if the IWM can break into the top half of that parallel channel. Next up, real quick update on the Dow Jones. Dow Jones, not too much happening here, but we did almost get above Friday's big sell-off. Notice this. Now, the Dow Jones is not a leading indicator, folks. This is a small collection of stocks. Granted, there's some very big stocks, but this is not a leading indicator since it is such a small view of the collective market. But nonetheless, we did have price action at one point above this candle, did not get above it and close above it today. We need a close to, in essence, negate this big dip that occurred here on Friday. So we'll still be waiting for that. The high end is 46,641 points. Next up, Bitcoin, guys. Look at this chart on Bitcoin. We've been talking about this for a while with this parallel. Really cool stuff going on here on Bitcoin. We caught support in this $110,000 range. Price is now bounced up and now retested this area. Look how many times. 1, 2, 3, 4, and 5 times hitting this declining trend line, making it weaker. So that's telling me right now in the near-term projection, Bitcoin actually is forming a near-term bear flag. Now, we need a few more days of consolidation for this to play out. But if this bear flag does play out with the measured move, it actually takes us down here to this inclining trend line, slightly underneath $100,000. And you better believe there's going to be a lot of buyers waiting there if price does start plunging down to the $100,000 mark. That's a psychological number. And you can go back through the charts and see what's happened every time price has gotten up to $100,000. First here when we were moving up to it, and then we got rejected several times before surging up above it. And then finally, when we did get above it and come back down, we had a big bounce here with the pierce of $100,000. You can almost anticipate a very similar occurrence to happen if price comes right back down here to the $100,000 mark on Bitcoin. Next up, we've got gold. Now, gold, guys, I want to display a different parallel that I have drawn here on gold. This is now on the weekly time frame. So you can see here, I've gotten the pivot low from October of 2023 connected over to the pivot high, which was a weekly topping tail on the chart of gold here in April of 2025. So you can see here clearly, we've broken out. Fantastic move, putting in all these green candles. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9. We're in time count territory for this move up. And the acceleration on the very end makes sense too, because whenever you're having these big moves, usually some of the very biggest moves occur on the last few candles before we have price action coming back down. So where can this take us? Now, gold, as we know, is partly helium because it just keeps rising up on the charts. And it did stutter for just a moment right here at this trend line. But that area for now will be support if price comes back down on the chart of gold. You can see that here basically right at $4,000, just slightly above. And this is a dynamic trend line. And that means that it changes value over the course of time since it's inclining, right? So this is going to be the first stop for gold. Should we start curling over, a more solid level will be on the top end of this parallel channel. And if you notice here, we stuttered before getting through this area and then previously too tagging it before getting rejected and making this consolidation before breaking out like we've seen. Normally what happens on breakouts, folks, price likes to come back and retest the place where it broke out. So in this case, it would be both of these support areas since we've continued to break out on the chart of gold. So once gold starts selling, be watching these areas for support to pick some up for yourself. Next up, we've got silver. Now, silver here, I've also developed another parallel for silver because silver is rocketing off the charts, now pushing up, making a new all-time high close today at $53.10. So let's zoom back out on the weekly time frame so you can see this larger parallel on silver. Now, this is fairly steep incline too, so I could see how this could potentially fail for silver. Silver is an industrial metal, so if the economy doesn't do well, if we do have a downturn in the markets, silver should be under pressure. But silver right now is being bought up because it's used in a lot of computer parts. So this has been good for silver, especially with the build out of the AI data center. But you see here, right here on the 50% area of this parallel channel, notice how when price has come into it, it's reacted. So once we've broken down, we've come back up, retested, much like I was explaining could happen on the chart of gold. But then since we've come all the way down, now tagged the bottom end, and now we're accelerating up on the chart of silver. So that takes us to the potential next resistance level for silver, right around $56.91. So if this momentum continues, be expecting a lot of resistance, potentially a pause and or pull back down to the first support right around $50 if and when we tag this area. And if you're interested in buying silver and don't have any yet, you want to see this move rapid up. You want to see this continue the pace so that the rejection from this area, if that occurs, will also have a rapid rejection in price, pulling price down here to these support levels, enabling you to get in with silver. Now, also, whenever price breaks out of trend lines, it likes to retest. So keep in mind, price can come all the way back down here to this inclining trend line. That's just how charts work. So keep that in mind if you are investing in silver. As we stated earlier, U.S. oil was under a little bit of pressure today, but mainly just chopping around from this big red candle that we've had on Friday of last week. Now forming bearish consolidation. Near term, it's immature, meaning that it needs to consolidate more for this bear flag pattern to play out. And if this does play out, we could be coming all the way down here to $52.80 on the charts. There will still be some good support all along this price action on the way down, right around 56, even 55. We'll see if this bearish consolidation continues. To the upside, we still will have resistance by this declining trend line, folks. This trend line still is not going away and likely won't for any time in the near future, right around $61.65. Next up, nat gas did much like I anticipated, folks. This area has some great support considering we've broken out, confirmed. Now we're retesting that trend line that we broke out from. So right now, look at all the wicks on the bottom of these daily candles. That's showing buyers are stepping up to the plate and picking up nat gas when it's sub $3.42. It's putting price back up above this declining trend line. Next resistance, 357, followed by 383, which I do believe gets tagged over the winter months. Next up, Morgan Stanley reported earnings today. Check this out, guys. Nice beat on earnings per share and revenue at 9.2%. So this is one of those things I like to display to everybody. Guys, look, we had a great move, great beat on earnings. Fantastic for Morgan Stanley, but what is it doing today? It's creating a daily topping tail. That's negative for near-term price action. But where did it create this? And this is part of technical analysis that I love, folks. It's all from a simple trend line I had drawn on my chart for now at least a couple weeks from this major pivot that occurred. So you can see this pivot from August of 2021 connected over to this pivot high here on September 23rd. And that was the line in the sand to beat today that it did not accomplish. So right now, most immediate support, it will be minor, will be down here at $161. Notice this fan type of style where you can find these support areas, both of which are derived from this pivot low in April. You can see the first trend line that goes up connects over to this pivot, to the next pivot, and then it strings through this area that created consolidation before breaking down. So we gapped above that now, which then that makes this area a minor support for price if it comes in tomorrow. The more solid level of support will be back down here on this secondary trend line, right around $156.48. But notice we've broken trend and we're trying to recapture trend. So this will be a big test for Morgan Stanley. A lot of resistance right above, right here at $165.40. But then also it's kind of wedged right in this area of trying to continue up the charts. So a tall task for Morgan Stanley in the near to midterm. We'll see if price action breaks this trend line. If so, we're coming down further on the charts there of MS. Next up, Bloom Energy. Guys, Bloom Energy is a play that has clean hydrogen production. They announced today new partnership with Brookfield Asset Management for building out its AI infrastructure and providing power there for that AI build out. Big news for Bloom Energy. That's a $5 billion agreement. So it's a big with a B. That's a big investment for this small cap company. But a lot of this seems to already be baked in. And the reason I'm saying that is because look at this inclining trend line. It's very sharp. And price got rejected right here. And it was all strung from a pivot high in August of 2025, connected over to these pivots in September, on September 19th. And that's exactly where price went. So in the near term, I think this price action needs to come back down on the charts, likely to where price broke out from most recently. This is going to be the first major area of support right around $101.31. And if that fails, we're coming down here to $85.96 before attacking these highs again. Great price action move today, but that selling pressure tells me the selling pressure may not be done for the near term, even with these AI build outs on the horizon. Next up, we've got some robotics plays. And guys, I want to bring this to your attention too, because robotics, AI, apparently this is going to be the wave of the future. And a lot of investors are trying to chase. So we've got data center plays, we've got energy plays, we've got nuclear plays, we've got chip plays with semiconductors, and now we've got robotics making the next big push in the markets, clearly defined here with iRobot, closing up on the day over 36%. At one point, it was over 40%. You can see here, price action was above $6 before reversing course. Look how much it dropped intraday. It dropped 11.91% to then close down here at $5.37. This is a big and nice breakout for iRobot. Should it retrace, like we've discussed, when trend lines break, They like to retest the trend line in which they broke from. But this sort of move may be so strong, it may not get back down here to this declining trend line. Thus, this first support area is one to watch at $4.62. If you want to get involved in some of this robotic space, that would be the first entry that I would recommend. And I'm also looking at myself to start dabbling in this continuation surge after just a little bit of cooling off on the chart. Next up, Symbotic. Very similar situation here. Now, Symbotic is involved with AI robots as well. And you can see here, it's actually excelled very nicely from $49 at the end of September all the way up here to $75. Now, notice too, this inclining trend line has posed resistance both yesterday and today. But today, we closed above it. So that means tomorrow, for Symbotic to continue this momentum, we need to get a close above today's high. That's $79.58. If we do that, that flips this trend line into support and could help propel the rally up higher. So tomorrow is critical for Symbotic. Do we have a more selling pressure? As we've seen, we had a very big candle today. If so, minor support down here at $70.80. Followed by 65.37 that corresponds just above the pivot high that occurred on August 5th. So be watching these areas for support for near-term bounces on Symbotic after some profit taking takes place. Because after all, guys, from the end of September to where current price is, 51%, I'd be jamming that sell button, taking my profits, moving on to another trade. Speaking of which, another one is at HIMS. Guys, today, so the HIMS had some good news regarding some menopause treatments for some of their patients. And you can see here towards the end of the day, HIMS on the 10-minute chart, look at this, just excelled up, broke through this trend line, creating a 10-minute topping tail before coming in and actually coming in further after hours. So you can see here, there's a myriad of trend lines. There's several of them, right? But they all are giving me ample information. We'll go through these. This is a great educational tool. I love doing this with you guys live. It helps everybody to get a technical eye and see these levels for themselves so that they can make determinations for buying and or selling on the charts. And it's all done by simple lines, guys. This is one of my favorite parts of the show. So you can see here, we've got a declining trend line from the all-time highs. And that's held price down on several occasions. Even on this little breakout, it ended up getting rejected and coming back down. Now, this inclining trend line was also holding price up before it broke down. And what does price like to do after it breaks down from a trend line? It likes to go up and retest it. That's where we're headed, folks. We're headed right up here, likely even tomorrow or the next couple of days, especially if there's more buying pressure in HIMS. So be looking for resistance right around $68.71. But also just notice how this declining trend line almost helped price on HIMS form a bull flag. You notice when price got above here, yeah, we deviated a little bit underneath, but all of this was consolidation with this trend line providing support, allowing the momentum to build and then boost higher today as we've seen. So the next stop, especially if the momentum continues, is going to be right up here on this inclining trend line. If we get consolidation, that trend line gets further away, leaving more room for HIMS to run in the near to midterm. Next up, AMD. Guys, super hot stock. Been in the news a lot recently. And guys, I'm here to tell you this. AMD is going to be, in essence, another NVIDIA. This chip stock is going to be very big, and it's going to continue to grow very big. And the stock on right here is clearly showing it also. But let's flip back to the weekly time frame. You see this parallel channel price has been stuck in since 2022. Now we're getting very close to the top end of this. Plus, we're overbought near term. So this is giving us an opportunity, especially if price gets rejected here at the top of the parallel at $241.41. That occurs for support down here right at the $200 area, followed by 177.60. These are going to be the areas you can start scooping up AMD for further momentum with this AI and tech-driven rally. If it does pause, if it falters for a little bit, but then picks up steam, say again in 26, you'll at least have some areas to pick some up at a discounted rate rather than paying up towards the top end of this parallel channel. So be watching for any sort of price rejection in the near to midterm so that you can scoop up some AMD. Next up, Tesla. Now, we did have a question come in from one of our members and followers regarding an inverse head and shoulders pattern on the hourly time frame of Tesla. And yes, there is one. It's quite hidden just a little bit, but you see a left shoulder here, a head here, and then a shoulder here. This would take, with this pattern, price up here to 457.27 to the next resistance area. But I've got a bigger inverse head and shoulders pattern, and it's on the daily time frame. These are more powerful. You see it outlined in blue. That takes Tesla all the way up here to $512.97. Considering the theme of the show, we've got robotics. So does Tesla. They've got Optimus that's going to be coming out sometime in the near future. We don't know when. But once they roll that out, it's supposed to be one of the most economical robot options out there for individuals to have at their house to help them with cooking, cleaning, etc. It's going to be really a big game changer if people can have and obtain these services on their own. So we'll see if that continues to roll out. If it does, any more momentum of that or robo-taxis, I could see easily pushing Tesla up here to new all-time highs, completing this inverse head and shoulders measured move target. You can see clearly displayed support areas, $424.13 currently holding. If we have selling pressure in the markets, be watching $395.17 followed by $381.37. Both of these levels would be good buying opportunities for the continued move up here to tag this measured move target. All right, guys, a lot of great opportunities out there in the markets. You just need to have a technical eye, sit back, be patient, and then you can capitalize on great entry levels for trades. Guys, that wraps up Trading the Close. Thanks so much for watching. Don't forget to like and subscribe. Send me a question or two. I'll be happy to address those on future shows, but I can't thank you enough for watching. I'll bring you some more info, trade setups tomorrow. Until then, have a great day, and I'll see you on the charts, folks.